A big data day this morning as gold prices are fighting to regain the $1,200 handle. We have Jim Wyckoff and Technically Speaking coming up. Jim, how are you?
Hello, Alex. Always nice to be with you.
So Jim, it's always a US dollar story these days, but something funny has been happening. We've seen a weaker US dollar and metals are not reacting to it. What are you seeing there?
Yeah, Alex, the past couple of days, we've seen the dollar back off significantly, and gold hasn't really seen much of a positive impact like one would expect. I suspect that's due to the holding pattern that gold and silver traders are exhibiting ahead of some key economic data coming out on Friday with the U.S. jobs report.
Now, Jim, speaking of that data number coming out on Friday, if market analysts are really holding back right now and waiting to see what it is there really a lot of stock being put into Friday's jobs numbers?
Well, Alex, we had the ADP National Employment Report out Wednesday morning that was a bit of a miss to the downside, not too much. However, if Friday's report is a big miss, either to the upside or the downside, you're probably going to see a significant reaction for the gold market. A miss to the downside significantly would suggest that the Fed may not be able to raise interest rates as soon as they want, which would be bullish for gold. Conversely, a strong jobs reading on Friday, stronger than expected, would give the Fed the green light to go ahead and raise rates as soon as probably September, which would be bearish for the gold market. However, that being said, I think the marketplace has pretty much factored in a rate rise coming in the fall of this year, and I think the surprise to the marketplace would be weak data that would limit that.
All right, Jim, now moving over to Europe, obviously we talk about Greece, which is the big factor right now. Rumors of a draft deal were out this morning, sort of rampant, but the market didn't pay any attention to it.
Yeah, the market's getting numb to that Greece situation right now. We've had, in recent weeks, we've had positive media reports come out and then not much happens, little progress. I still think this is a situation where the can's going to get kicked down the road, so to speak. No, I don't think this problem's going to go away anytime soon. The gold market's ignoring it right now, but I think longer term it's a bullish underlying factor for the gold market and a bearish underlying factor for the euro currency.
All right, Jim, let's take a look at your Wyckoff market ratings for the week.
Alex, I'm giving gold and silver a Wyckoff market rating of 3. That's firmly in the bearish camp. Sideways choppy trading in both markets at lower levels. Overhead resistance for August COMEX gold is $1,200. Solid support at the recent low of $1,170. Looking at July silver, we've got solid overhead resistance at $17. Solid support at $16.
All right, Jim, before I let you go, let's talk about this new feature you have out on our website early in the morning, an audio cast called The Open. What is it?
Alex, The Open is just a quick recap of overnight developments that are significant to the precious metals markets and a little update on what price action is doing. It's really geared for the person that may be driving down the road or doesn't have access to a computer screen or maybe has a mobile device where you can listen to that audio and don't have to do reading, for example, if you're driving down the road.
Sounds great, Jim. Thanks.
Thank you, Alex. Talk to you next time. Bye-bye.
And thank you for watching this edition of Technically Speaking. As always, comments and questions are welcome at newsfeedback@kitco.com. Have a good one.